Welcome back to the channel. I'm Yogesh, your go-to source for smart investing insights. Today, we are decoding one of the most awaited fund launches of 2025, the QSIF Equity Ex-Top 100 Long Short Fund. If you are looking for innovative ways to tap into India's fast-growing mid and small cap segment, then you can't miss this one. So, let's get started. Now, let's understand why we focus on Ex-Top 100. These are the mid and small caps, the so-called SMID segment, and these are increasingly crucible for future leaders in India's economic story. They are more agile and fast-growing, but also volatile. This fund bridges the gap between traditional small and mid-cap funds and provides the flexibility through dynamic exposure management. Unlike traditional Indian equity funds, Quant QSIF's edge comes from long-short flexibility. It can take up to 25% unhedged short exposure. Shorting provides a unique alpha source and downside buffer, especially during market corrections, something long-only funds cannot offer. Now let's understand the portfolio construction and asset allocation. The benchmark for this fund is Nifty 500 Total Returns Index. Up to 65 to 100% will be invested into SMID, cash equity or equity arbitrage segment. SMID unhedged derivatives, that is long, will be between 0 to 35%. SMID unhedged derivatives, that is short, will be between 0 to 25%. The large cap long only position will be in between 0 to 35%, and hedging can be between 0 to 100%, and balance cash and cash equivalents, which carries the lowest risk, will be between 0 to 15%. So a portfolio manager can do rebalancing dynamically between small and mid-cap securities, along with long and short options. Adding this fund to your portfolio can statistically reduce portfolio volatility. It can also enhance diversification through shorting, thereby lowering drawdowns, offer additional alpha even in weak and range-bound markets. The company has provided an illustration where they are comparing the performance of traditional mutual fund scheme with SIF equity centric scheme in different phases of market. So what the company says is that if there is a raging bull market, the traditional mutual fund will outperform SIF fund, and during the correction and consolidation or range bound market, bear market or volatile market, the SIF centric fund will outperform compared to traditional mutual funds. Now let's compare SIF mutual fund and AIF. The investment horizon for fund managers in mutual fund schemes are medium and long term. For SIF scheme, it's short and medium term, and for AIF, it's long term. The relative risk profiling for equity mutual fund scheme is high. For SIF scheme, it's moderate, and for AIF, it's very high. The tax efficiency in mutual fund and SIF is high, and for AIF, it's low. The diversification for mutual fund scheme is diversified, SIF is more diversified, AIF is less diversified. The maximum exposure for mutual fund and SIF scheme is 100%, and for AIF it's 200% due to leverage. Hedging is allowed in all the three types of schemes. Naked short is not allowed in mutual fund scheme. In SIF, it's allowed up to 25%, and in AIF, it's allowed up to 100%. Low risk derivative strategies like arbitrage is allowed in all the three types. Covered call is allowed for all the three of them. Bear put spread is allowed in SIF and AIF. Long straddle is allowed on all three types. Protective put is allowed in all the three types. Bear call spread is allowed only for SIF and AIF. Short call is allowed in SIF and AIF. Short put and short straddle is allowed in SIF and AIF. The NFO for this scheme is open from October 24th till 7th November 2025. The minimum application is 10 lakh rupees, and after that you can do SIP from rupees 10,000. There is no entry load and there is 1% exit load if redeemed within 15 days. If you want to invest in this fund, then please check the link in the description. Thanks for watching and happy Diwali to everyone.